So how did I make $120 trading Apple call options? So looking at Apple at 10:13, Apple on the 30-minute time chart, 10:13. Let's see, not this candle, but this candle. So basically what I did was I played Apple call options as soon as it landed on the 200-day moving average, waited for a bounce off the 200-day moving average, and once that happened at 10:40, I sold out the position, and that's basically how I made $120 trading Apple call options. So this trade was pretty short and simple, and basically it's like I've been it's basically what I've been saying, like try to mentalize your percentage target in mind. So the next step would be try to use the moving averages as your entry points, whether you decide to either play calls or puts. In this case, I played call options on Apple. So let's see. So for example, I played call options on Apple because this previous candle used the 200-day moving average as support, and so I was like, okay, let's see if the 10:30 candle can use the 200-day moving average as support again, and let's see if we can see a bounce off the 200-day moving average. And basically when that bounce occurred of Apple bouncing off the 200-day moving average, I sold out at 10:40, and basically that's how I made $120 trading Apple call options. So basically you analyze the moving averages, and these are the moving averages you can add to your charts. And another thing to keep in mind as well is that mostly these trades that I trade, I use the 30-minute time chart. I feel like I find the most success using the 30-minute time chart. I've tried the other time charts, but honestly for me, for like if I'm day trading specifically, I feel like the 30-minute time chart is the best time chart to trade on. And basically the moving averages you can add to your charts are the 9, 20, 50, 180 and 200-day moving average. And basically what you're trying to do is you're just basically using the moving averages as your decision to either enter calls or puts. So for example, let's say you bought as soon as let's say you bought Apple call option as soon as it landed on the 20-day moving average right here on the 10 candle, and then all of a sudden Apple breaks that 20-day moving average. Okay, what's the next step that you could do? The next step you could do is you could either buy more Apple call options as soon as it lands on the 180-day moving average, or if it decides to break the 180-day moving average, you could buy more Apple call options as soon as it lands on the 200-day moving average. So basically you're kind of using the moving averages to as your entry points to buy in. That's whether you're deciding to buy calls or puts. In this case, what I'm talking about is you're buying call options once it approaches each of those moving averages. And basically eventually what will happen is that I'll say probably 60 or 50% of the times the particular stock that I'm trading usually tends to use the moving averages as support throughout the day. So basically if you were to have patiently waited pretty much for the next candle to occur, the 10:30 candle, you probably would have sold out the position for probably a 5% gainer, sort of. That's something that I could mentalize if you're trading either weekly or options that expire in 2 weeks. And basically you could have held this position until it reached this previous high of 203.84. So basically you could have waited for 10:30 to use the 200-day moving average as support, bounce off of it, and then you could have waited for this candle, the 11 candle, to break above the 50, 20, and 9-day moving average. Once that occurred, you could approach, you could aim for, selling out the position once it approaches that previous candle high of 203.84. So that way, you know where to sell out your position. So basically, you're just, in a way, just using the moving averages as your entry points to decide whether to play calls or puts. And basically, it's not the end of the world if it breaks like the first moving average, then it breaks the other moving average. Like, as long as there's like more moving averages below, and like, you should be good. But basically, also try to keep in mind that try to mentalize if it's breaking moving averages and it starts approaching like certain support levels, and it just decides to break those certain support levels throughout the day. Try to mentalize your loss that you're willing to take for the day, try to mentalize that loss that you're willing to take for the day, because most of the times this particular strategy won't always work out 100% of the time, just like any other strategy out there. But for me personally, I've been using this strategy of using the moving averages and basically dollar cost averaging along the way as it approach, as long as that stock decides to fall on the other moving averages below, I'll try to dollar cost average, or basically try to buy more more call options if I'm playing call options. So let's see, let's see if we can do a SPY example. So let's see. Yeah, I mean, you could, so let's do the SPY, for example. Let's say you bought, let's say you bought SPY call options as soon as it landed on the 180-day moving average, right? And you're just patiently waiting for a bounce off the 180-day moving average. That basically happened, and basically what you could have done, the next thing that you could have done is basically, once SPY used the 180-day moving average, your selling point could have been when the next candle, the 15 candle, approached the 50-day moving average. So this 15 candle, as soon as it approached the 50-day moving average, that could have been your selling point of when to sell out your position. So you could have probably made, let's see, if it's 5, the 180-day moving average reads 593, and if you sold when it approached the 50-day moving average of 596, you probably could have made maybe a 15% gainer for that day if you were trading like weekly options of SPY. But that's pretty much it. That's how I try to use the moving averages as my entry points and as my exit points in a way. So that's pretty much it. This is not financial advice. As always, take care. And if you guys want to sign up with my Webull link, you're welcome to do that. So it'll be in the description below or my IG bio. So that's pretty much it. As always, this is not financial advice. As always, take care. Bye.